Have you ever wondered as a DIY retiree how much more income you could incur this year without crossing a key threshold, like that $150,000 in AGI limit for the new senior bonus deduction? Hi, I'm Jim and I was retired. And in this week's video, I'm going to show you a simple DIY tool to help figure that out. It's the one I've been using for my own 2025 tax planning. We'll talk about using the TurboTax What-If form to compare scenarios. Stay tuned. In the past few years, I've explored a number of tools, including Dinkytown and Excel 1040 spreadsheets to make fourth quarter tax planning decisions. This year, I used the TurboTax What-If form that you found in my desktop home and business software for taxes. So I started by pulling up my 2024 tax return and looking at the what if form. Now the what if form is in this software and it's been updated this year in 2025 to reflect the 2025 tax planning changes in the One Big Beautiful Bill. That includes that $6,000 senior bonus deduction for those of us that are 65 and older. The What If form is exclusively available in the desktop downloadable versions of TurboTax, like Deluxe, Premier, Home, and Business editions. You can't get it in the online-only version of TurboTax. And you need to use the forms mode as opposed to the easy answer questionnaire. If you cannot see the form immediately, make sure you go search for the form to find it, as I had to do in my 2024 tax return. And the reason that TurboTax Online doesn't have this is they don't have any forms. They're a simplified application. You need the desktop application for this. Now, I've used the what if form in two ways. One is using it straight in your tax return with 2024 data and just pull it up, click to look at 2025 what if. But I've also gone in and done a special estimated tax return for the coming tax year where I go through the questionnaire, the Easy Step questionnaire again, with my 2025 data from Quicken. So I calculate, and when it comes to dividends, I plug in an estimated dividend form for the data. Now, in my case, I wanted to know how much income I could pull from my 401k and stay below that 150,000 AGI, adjusted gross income limit for the full senior bonus. Now, only I get it this year. It's available to those of us that are 65 and older, and I'm the only one in our marriage that is that for this tax year. Next year, both of us will qualify for it. I should also mention at this time, I am not a CPA. I am a DIY retiree. So take these as entertaining ideas. Always look and talk to your own accountants. And I'm not sponsored by TurboTax. I'm just a customer. I've used it for more than a decade. But rather than show you my actual tax return for this video, I created a new 2024 tax return for a sample retired couple who are both on Social Security with some additional retirement income. And I'll walk you through their tax return and how to find the what if form for them, and I'll illustrate how it could be helpful for your December decisions. So here is the tax return I created for our sample couple, and I went through it and I just chose what to work on and entered the information. And for instance, update, I just created the dividends and interest income for the couple. I added the Social Security and the pensions through this dialogue. And again, I created it through the Easy Step dialogue as opposed to right on the forms. And then likewise, I stepped through the deductions. So how do you get to the forms? You click up here to forms. make sure that the What If worksheet is available to you. If it isn't, you may need to search for it and add it to your tax return. So pull it up here, and then it creates the form. Now I'm going to view this here in its own window. Unfortunately, the What If worksheet doesn't allow you to go really big in the window, but it does open up a separate window, which will follow along here. When I first open it up like this, the other columns were empty. So I've gone through and deleted what was in them with this clear amounts in the columns. And then it allows you to add, subtract columns. It also allows you to copy. So you're going to start by doing this, copying 1 to 2. But then make sure you do this. Click here to apply the 2025 tax rates. Then you start to see the changes that I made along the way. Now here is a summary of that sample couple. In 2024, Jim, I was retired, was 66, and his spouse Marie was 65. They had $5,000 in taxable interest, $10,000 in ordinary dividends, including the $5,000 in qualified dividends, and that's the way you enter it with this software. On the What If form, I copied column 1, which is what was entered in the form, into column 2, and then applied the 2025 tax rates with that little check. Notice that it adjusted the year-end ages for Jim and Marie to 67 and 66. Now, in 2024, Jim took $40,000 in IRA distributions and received a $25,000 pension with no COLA. Now, for the Social Security benefits, I manually adjusted the numbers to apply the 2025 Social Security COLA of 2.5%. So I started with what they had in 2024 and increased it by 2.5%. And again, that's this year's COLA, not the 2.8 COLA that I talked about in last week's video. So if you look in column 2, you begin with the same IRA withdrawal, the same pension, and slightly higher Social Security values. If no other changes are made in 2025, their adjusted gross income will go from $112,538 to $113,351. But take a look now lower on the form here and see what the One Big Beautiful Bill Act does for this sample couple. The larger standard deduction plus the $12,000 in senior bonus deductions will reduce their taxable income from $80,238 to just $66,651. They are going to save about $1,639 in taxes without any other tax planning. Now, for this sample couple, the larger standard deductions still work best, even though they have an opportunity for a larger state and local tax deduction. As noted here, it just doesn't add up for this couple in New Jersey. It may for others, and you need to run it, and this is the where you would run it. Increase your taxes there and see if taking more tax deduction for your real estate property taxes helps. In this scenario, I've shown in column 3, I copied the values from column 2 to column 3 and then again applied the 2025 tax rates. But then I increased line 15, the taxable IRA distributions, to $70,000 to account for an added $30,000 Roth conversion here in December, as shown here. And that allows you to start modeling what it does to your adjusted gross income and your taxable income. The Roth conversion would add about $3,600 in taxes to their tax burden in 2025. But since the estimated taxes were high enough, they would still get a tax return of $400.76 next April. I always like to make that as small as possible because why give a tax-free loan to the government? But anyway, they would still have $30,000 moved from their tax-deferred accounts to their tax-free accounts for growth in future retirement years. This tool democratizes pro-level tax planning without paying an accountant fee. And that's perfect for us DIY retirees concerned about keeping costs low. Why don't you share what you're doing to model tax scenarios in the comments below? Are you using a what-if form to look at higher medical deductions or added state and local taxes? Or are you doing some Roth conversions to fill up your tax brackets? Or are you taking advantage of the capital gains tax shelters of 0% if you can stay in that threshold, or 15% compared to 22%? What are you modeling? Make a note down below. Also, be sure to take a moment to like, subscribe, and share this channel if you like entertaining ideas from a DIY retiree. Now, some caveats. This only works for the federal taxes. The what-if form doesn't have any place for state income taxes. So you may want to do some modeling on your own spreadsheets or with another tax modeling spreadsheet, or perhaps even bolden before you pull the trigger on your strategy. I will conclude with my standard warning. I am not a professional planner. I have no initials after my name, so take these as entertaining ideas from one educated consumer to another. Always do your own due diligence and seek out a professional if you need one.